Hello. At the outset, I thank the management of Sri Sri University for inviting me to participate in the orientation program of the first batch students. I also congratulate you for joining this new university. I am sure the university, with the passage of time, will become one of the well-known academic institutes of this country and also of the world. Today, as a part of the orientation, since you are in the beginning at the threshold of the management education, I would like to touch upon three issues. One is, are you a student of business school or a management school? Is there a difference between a management school and business school? And this aspect I'm not going to discuss today, but I would like you to reflect on that as you move along the course, and when you come out of the course of this university, would you like to just be a manager of business, or you would like to emerge as a manager of the society, manager of the larger issues, not necessarily the organizations, and that too not necessarily the business school alone, not necessarily the business entities alone. The second issue, which I would like to spend more time, what is the subject matter of management education? And after discussing the subject matter, I would like to position accounting and finance and say how accounting and finance is relevant for management education, and within the management education for businesses, and within the businesses for the corporate form of organizations. So wherever I go, when I ask this question, name some organizations, I get these names: Infosys, Apple, Microsoft, Tata Motors, Google, and as you have said, the Art of Living, Sri Sri University. But if you see this list of organizations, the large number of organizations that you have given as an example belong to one form of organization, and that is the company form of organization. So management education deals with the organizations, and knowingly or unknowingly, our courses are predominantly tilted towards the corporate form of organization or the company form of organizations. So, but in principle, as a student of management, you are not just expected to understand the corporate form of organization, but also are expected to understand the other forms of organization and the management of those organizations. And this becomes all the more important because you are from a unique institute and unique university called Sri Sri University. So whenever you see an organization, three issues should come to your mind as a student, but as you progress, of course, this will automatically be there in your discussion and analysis. So whenever you see an organization, you should ask the question, what is the form of organization? Who are the owners of the organization? And who is managing those organizations? So form of organization, ownership and management are three important managerial issues. When we say form, the form of organizations can be sole proprietorship or partnership or company form of organization, society, trust, or even the government departments. For example, if I pick up the companies that you have given as an example, or the organizations that you have mentioned, and understand the form, Nalco is a company, Infosys is a company, XIMB and Sri Sri University, these are all trusts or societies. Indian Railways is a department, and if I pick up BSNL, The present form, it is a company, but its past form, it was a department. So the forms of organization, whenever you see any organization, you should understand what is that form. You may ask why the form is important. The form is important because the statutory requirements, compliances, the management, the way in which money can be raised to a large extent depends on the forms of organization. So if I say that corporate form of organization is popular in the business school or a management institute, one of the reasons is the availability of information, the availability of data, the regulatory environment in which they are required to share most of the information with the stakeholders. So that may be one of the reasons why in most of the business schools and management or management institutes we see corporate form of entity as more and more given as an example. So let us spend some time on the corporate form of organization and understand the certain salient features of that corporate entity, and in the process let me take you through or present the relevance of finance and accounting there. So one of the important questions with respect to the corporate form of organization is who is the owner. The shareholders are the owners of the company. But when I say shareholders are the owners of the company, and if I am the shareholder of Infosys, if I say that I'll go to the Infosys office and pick up a laptop, I can't do it. Because I am the shareholder, and the shareholder is the owner of the company, and the company is the owner of the assets or the property of that. So I'm not directly owning the property. So there is shareholder and there is company. These are two different entities. But the shareholding pattern, the ownership, has a huge influence on the management of the company. To understand the ownership of the company and the management styles, one needs to observe the shareholding patterns of the company. Who is the owner, and is the ownership changing over a period of time? In the last few weeks you might have observed a company called Maruti Suzuki, which is in the news for quite some time. Now who is the owner of Maruti Suzuki? Why the problems are there of late in Maruti Suzuki? All of you know what is Maruti is making, but who is the owner of Maruti Suzuki? Now if you observe the ownership of Maruti Suzuki, then you can see that 74% of the shares are owned by foreign promoters and foreign institutions. The public is only owning 2% of the shares, and financial institutions 13%. So majority, a significant part of the shares ownership of Maruti Suzuki is with the foreign promoters and foreign institutions. Now will that affect the management? The answer is yes, but you have to observe the styles of management and then you can feel. But once upon a time, few years back, Maruti was fully owned by Government of India. There is a change in the shareholding pattern. If you compare that with Tata Motors, Indian promoters have 35% stake in Tata Motors. Wipro, 78% of the shares are owned by Indian promoter. Infosys, another very well-known Indian company, 16% is owned by the Indian promoters. 56% is owned by the financial institutions. But if you see Hindustan Unilever, 52% is owned by the foreign promoter, that means the parent company. And TCS, 73% is owned by the Indian promoter. So this composition, which I call shareholding pattern, observe the shareholding pattern to understand shareholdings at a point of time, to understand the ownership, and observe the changes in the shareholding pattern over a period of time to understand what is happening to the company. So keep a watch on, let's say, Maruti or Infosys, and observe these companies with respect to the shareholding patterns. So therefore, the ownership of the company can keep on changing, particularly when we talk about when we say the ownership is with the shareholders, and the shareholder has a right to sell the shares in the market, then obviously the shareholder may withdraw at any point of time, may get into the company any time. So the shareholding pattern will keep on changing. So one of the important questions which should be there in the back of your mind when you see a company is ask who is the shareholder, and then observe the shareholding pattern. Next. So the ownership of the company is with the shareholders, but the management of the company is not with the shareholder. The management is with the board of directors. So one of the important features of the company form of organization is the separation between the management and ownership. That means management is with the board and ownership is with the shareholder, and ownership is dispersed widely, geographically, anywhere the shareholders can be there. But the shareholders authorize the management to take the board to take the decisions. So management, that is a board, is an agent and the owners are the principal. This is called agent-principal relationship, and agent-principal relationship creates some problem, which poses some problem, which we call it agency problem, and that means there is a possibility that the owners, the agent, that means the management, may not take decisions which may be in the interest of the owners. So this is the genesis. I'll say that one of the reasons why management education is developed, or your responsibility is to understand why managers or sometimes may not take decisions which are in the interests of the shareholders. If the answer is yes, examine the ways this particular problem of agency can be addressed. The many management theories are centered around this agency theory, and you can easily appreciate that since the management will have more information than the owner, this is called information asymmetry, and we say that accounting or financial accounting is expected to reduce this asymmetry. That means the management is under obligation to share the information with the owners, the shareholders, periodically, as of now quarterly or annually. So in the process of providing information to the shareholders through the financial statements, the gap between the owners and the management is expected to reduce. But here also I would like to put a question: is accounting or annual reports are really doing that? That's your job to find. The other important feature of a company form, which I say that either one of the best features of the companies or one of the dangerous features of the company, is the limited liability of the shareholder and unlimited life of the company. The liability of the shareholder is limited to the shareholder's money only, money contributed and a profit generated by the company. Where the shareholders come and shareholders go, but the company continues, so unlimited life. So there is an upper limit of loss for the shareholders, but no upper limit of profit. So there is a possibility that the management and the shareholders together can join hands and expose the firm to higher and higher risk. We'll pick that up later on when we see some balance sheets. So the limited liability of the shareholder, unlimited life of the company, the separation of the management and the shareholding or the ownership are the most important features of the company form of organizations. But what is that management is required to do? Management gets certain sources, certain money, and that money is used to create wealth for the shareholder. But what is the sources of money for a business? The sources of money for a business can be classified into three broad categories. Capital, which is the money contributed by the shareholders or the owners. The retained profit, which is the money generated by the business, and the liabilities, which is the money contributed by the outsiders. So money contributed by the owners, money generated by the business, and money contributed by the owners are the three sources of business money, no other source. The business may be large or a small, public sector or a private sector, a multinational or not a multinational, but the sources of money can be divided into these three only. So let us take some examples to understand that. I have taken Hindustan Unilever, a multinational company, Infosys, an Indian multinational, Maruti Suzuki, and one local company, Sesco, which actually supplies power to your institute and my institute. So Sesu or Sesco. These are all in crores. Capital, reserves, liabilities. And these are the total assets. So the total assets of the company are financed by these sources. It becomes more meaningful if you see that in a percentage to get a feel that you can see that Hindustan Unilever is financing the business more by 68% of the assets are financed by liabilities. Only 32% is financed by the equity or shareholders' money. Infosys, 83% of the business is financed by equity. Maruti is about 75% is financed by equity. But you can see that SSO, which is a loss-making company, which is an out-and-out liability-driven company, so 137% of the assets are liabilities are 137%. So by observing the sources of money of any type of a business, a power company, the SSO, motor company, an automobile company is a Maruti, and an IT company is Infosys, and FMCG is Hindustan Lever. Independent of the various nature of the business, you can compare the sources and understand where is the money coming from any business. The focus of our discussion is not assets, but on the financial structure or financing decisions of the company. So therefore, when you pick up any company, to understand, observe where is the money coming from. The owner is the shareholder, but financier can be anybody. Can be shareholder, can be supplier, can be customer, can be employees. So therefore you have to observe. For example, in case of Infosys, the capital contributed is only 287 crore, whereas the profits are 29,487. That means huge amount of internal profits are financing the business. Whereas in case of Sesu, the capital has been eroded by the losses. So by observing the balance sheet, it is possible to know where is the money coming from for a particular firm. So the financial statements are actually relevant for both the shareholder as well as the debt holder, because as a debt holder, liabilities are the obligations of the firm. So liabilities are given by the outsiders. So they would also like to know what is happening to the company. The shareholders, which are dispersed all over the country and all the world, would also like to know what is happening in the company. So the balance sheet or a financial statement has the ability to pass on this information to these people. So both the shareholders and debt holders have interest in understanding the business decisions taken by the management. And there comes the role of financial statement. Financial statements are actually the end products of. The financial statement is the end product of the financial accounting, and financial accounting is actually the process of, is a process of converting the business decisions into financial. If I'm required to teach a group of chartered accountants, maybe I'll give a different definition, but for you as a business school student, the accounting is not just recording of transactions, but accounting is a process of converting the business decisions into financial statement. And what are these business decisions? The business decisions that you come across can be several, can be many, but all these business decisions can be actually classified into these three categories, which you also gave example: financing decisions, investment decisions, and operating decisions. So whenever you see a business and to understand what is this business doing, the decisions taken by the managers can be classified into financing decisions, investment decisions, and operating decisions. And the point I want to drive in here, that all these decisions will find place in the financial statements. You can ask a question here, how will they find place? Every business decision, slowly you will pick that up and understand more as you get into accounting and finance. Every business decision will involve these items. Incomes, expenses will affect the assets, will affect the liabilities, will affect the equity. If I put these three together and show that relationship, which I call it the fundamental relationship of business, that assets is equal to the liabilities plus equity. So this is the fundamental relationship between the financial item. Liabilities is an outsider's money, obligations of the firm to meet by the end of the year or the end of the period. And these obligations may be statutory or may be contractual. Equity is a residual claim. The company is not under obligation to pay back that equity. Is a residual claim, and the liability is an obligation. The assets are either financed by liabilities or equity. So depending on the company, you can see that the assets are financed by liabilities or the equity. So an important question here, though is not within today's discussions, I cannot answer that. Is there any specific ratio or a level at which the assets have to be financed with debt and equity? It's answer at this juncture, answer is no. But why? As you get more into finance, we'll discuss that. And all these financial items will appear in the financial statement. So every business decision will affect the financial item, and every financial item will appear in the financial statement. So therefore, understanding the financial statement means understanding the business decision. Reading the financial statement means understanding the business decision. So you, as a student of business school or a management education, you are not expected to prepare the financial statement, but definitely expected to understand the business decision. And the best way to understand the business decisions is to understand the annual report. And the financial statements or the annual report are the manifestation of the business decisions taken by. So you should have one objective function. Pick up an annual report, go through the numbers, start talking to the numbers. The numbers will talk to you, will tell you a story about the company. About what? About the decisions taken by the management of the company. So to put it in a pictorial form, business decisions will involve financial items, and the financial items will appear in the financial statements, which are visible which is mandatory. Every firm, every company is bound to give this information to the shareholders and available. Who are these users? Why should anybody understand? The user can be investor, potential, existing. You and I as a researcher, as a student, management, if you're an insider, you want to understand the business decisions and take future decisions. Analysts, you can become advisor to somebody, so you can analyze and advise the companies. Tax authorities, of course, they want to know. You might have observed what happened in Vodafone case. Is actually a very interesting case to understand the financial issues involved in that. The government is also interested in the finance. So users of financial statements are many. The bottom line is to understand the financial statement. That means you're understanding the business decisions. So as a student of management education, besides picking up the other skills of managerial functions, develop that ability to read the numbers, develop the ability to talk to the number, develop the ability to question those numbers, so that your ability to understand the business decisions become richer and richer. In that respect, I've actually given a small work for you, that the annual reports of Maruti and Tata Motors are available on the net, but I picked up the balance sheet. So see the balance sheets of these two companies and examine the changes in ownership and examine the financing decision. One is predominantly owned by the foreign promoter, other is more owned by an Indian promoter. Both are in the same business, but observe what has happened, how it has happened, what are the changes in the shareholding patterns. As a result, what are the consequent effects on the management of the business. Having said all this, I would also like to mention some readings for you which are not directly related to finance, but definitely being a student of management in institute like Sri Sri University, don't always be driven by the large corporate entities. Observe what critics are talking about large corporate entities, but I'm not saying that just buy that argument, but be aware of what is happening in the world. So one of the relevant books is When the Corporations Rule the World, and that is by David Cotton. When the Corporations Rule the World is actually, I can say, a classic for a business school student or a management education to understand what is happening to these corporations. And the second one is about the democratic corporation, where this Russell Ackoff has actually explained the evolving nature of organizations. Besides this, I have my personal resources which are accounting. One is the accounting ebook, where you can get material relating to the accounting issues. The other one is the virtual class, the accounting virtual class, where I have actually put the various thoughts, issues that I discussed at the various forums. This is YouTube, and each is about 5 or 10 minutes. Even today's presentation will be available in the form of YouTube. So understand what corporations are doing, understand what is a corporation or an organization is all about, and then if you are interested and understand accounting, then large number of resources are available, but my resources are also there. Thank you very much. It was my pleasure to interact with all of you. Thank you very much.